Ladies and gentlemen, welcome back to the channel. Today's a really weird day. Some of our favorite AI stocks, the high flyers, selling off. Okay, Quantum selling off, Resolve selling off, Poet selling off. Some of the ones we really like, okay, and others we don't like as much are selling off today. Now, the headline S&P was up a lot this morning, sold off, and then rallied back about half of what was lost. What's happening today? What do you need to know? Well, first and foremost, China is trying to crash our stock market. Okay, you can't make this shit up. That's at least what the Wall Street Journal reported today. It's basically turning into a pissing contest between Trump and President Xi of China. And yeah, we're just in the middle of it. Okay, here in today's video, we're going to go over that news. We're going to cover what the Fed said today and much more. We're going to look at earnings today and after hours and throughout the rest of this week. We will look at any and all economic data that will be coming out. And at the end of this video, we will cover my general expectations for markets. You need to be ready for this pissing contest to get worse or end abruptly. That's the tricky part. I'll share with you what I am doing to navigate this market. If you guys want to come join us, come navigate this market with us, and potentially make a shit ton of money, check that link out down below in the description of this video. I'm basically over here begging for another crash. Like, literally begging. We made hundreds of thousands. Collectively, we made millions, or I made hundreds of thousands. Collectively, we made millions and millions of dollars in the trading community back in April when the markets crashed. And really ever since then. If we get another opportunity, we are going to strike on the high quality stocks that we are already executing on. It would just be another opportunity. If you guys want to come invest with us, come trade with us, come find these under the radar AI stocks that have been able to, foster us 180+% year to date returns, outperforming any and all hedge fund or institution that exists in the world today. Check that link out down below in the description of today's episode. But nonetheless, let's get into all of your breaking news today. Now, in broader market news today, a U.S. judge says I will likely block Trump administration from carrying out mass layoffs during the government shutdown. And the U.S. Budget Director Vaught says we are definitely talking thousands of people for government layoffs. Goldman Sachs says it's way too early to know if AI boom is a bubble. Now, we will get back to smaller pieces of news in just a moment. Let's get into the biggest news of the day today. The Trump administration will set price floors across a range of industries to combat China, Bessent says. So basically what this means in English, they're going to set prices for certain things, right? For an example, if China can produce a beam of steel, let's call it, right, for $20, and in America, it's just not possible to do that. Well, maybe a beam of steel in America is $40. Okay, they're going to set the price at a bare minimum of $40. You cannot buy steel unless it is $40 per beam. You cannot go to China and just pay a tariff to, undermine U.S. companies, even if it's the, best possible price that you can get in America. Now, here's part of the problem with that. Price controls never work. Price controls are not good, okay? Price controls are partially what helped cause the inflation surge or lead up to the inflation surge in the 70s, okay? So there's not a great historical precedence of this. Now, it says the Trump administration will set price floors across a range of strategic industries to combat Beijing. The administration could take equity stakes in more companies in the wake of China's new restrictions on rare earth exports. Scott Bessent basically says, quote, when you are facing a non-market economy like China, then you have to exercise industrial policy. Bessent told Sarah Eisen at CNBC's Invest in America forum in Washington. This says, quote, So we're going to set price floors and the forward buying to make sure that this doesn't happen again. And we're going to do it across a range of industries. Bessent also said that it is he says, quote, "I wouldn't be surprised." Bessent says when asked about additional equity stakes, he says, quote, "When we get an announcement like this week with China on rare earths, you realize we have to be self-sufficient, or we have to be sufficient with our allies." And then Bessent said we need to be careful, very careful, not to overreach, right? Once you start to have the government involved in so much of the private sector, it's like, is that the start of, not being capitalistic anymore? Like, government just takes a stake in everyone, and that's obviously not good. Now, last night, Trump said he was considering a cooking oil ban or embargo on China. President Donald Trump on Tuesday said the U.S. is considering, quote, "terminating business with China having to do with cooking oil as a retaliatory action against Beijing's refusal to buy U.S. soybeans." China was the top buyer of American soybeans for years, but has not bought a single soybean from the U.S. since May amid its trade war with the Trump administration. The country has instead been buying the crop from Argentina and Brazil due to Trump's high tariff rates on China. Trump's threat to China comes after China used cooking oil exports surged to a record high last year, with the U.S. accounting for 43% of the total export number. So yeah, we're going what sounds like to some pretty extreme measures here, from what I can tell. That doesn't sound like things are getting better with China. They sound like they're getting worse. And that is why a lot of areas of this market today are selling off. It's really a risk-off day today. A lot of stocks are down a lot. Now, this is a pretty damn big headline also. It says, the Wall Street Journal today reports that China is intentionally crashing markets to gain leverage over Trump. Basically saying, hey, we're going to F the markets up, and it's going to be painful unless you make some concessions. I don't know about you guys. I don't know Trump on a personal level, but from what shit I hear in the headlines, for lack of a better word, I don't think Trump's the guy to try to get leverage on over the markets. I think this could be a pissing contest in a worst case scenario where everything just goes down the shitter, for lack of a better word. And that is the risk, right? If things get worse, they could get really bad. We've never had 20% back-to-back declines in a single year, but that does not mean it could not happen. And you need to be prepared in a worst-case scenario for all hell to break loose. Now, a market crash, a recession, that's not in Trump's best interest. But how do you differentiate between, Trump's ego and not giving into China, and how big is that versus a market crash that's not good for Trump's policies? Like, which one is going to cave first? Is Trump going to cave and give a concession to China and hurt his ego, hurt his look? Or is he just going to say, to hell with markets, F you China, kumbaya? I don't know. You got to be prepared for either of those situations to happen. Now, Scott Bessent said today, we believe that the shutdown may start costing the U.S. economy up to $15 billion a day. Fed Waller says it may be a couple more years before we see new jobs from AI replacing the old jobs. Moran says, I expect productivity will rise in the future and feel deregulation will give it a powerful push. Ed Moran says AI investment could push up long-term neutral rates, notes that immigration and policy changes have driven rapid shifts in the neutral rate, making current Fed policy more restrictive than widely believed. Moran emphasized differences among officials center more on the speed of rate cuts than the final destination, expressing confidence that services inflation, driven by housing, will decline in coming quarters. He said the Fed should place less weight on gradualism and be ready to reevaluate if data or housing inflation comes in hotter than expected. He added that tariffs show no meaningful impact on U.S. inflation so far, that U.S. goods prices mirror other companies, and warned renewed U.S.-China trade tensions raise economic risks. Moran urged the Fed to stay out of climate and political debates, maintain neutrality, and focus on sound policy. He concluded that the recent drop in long yields validates the Fed's decision to cut rates, suggesting quantitative tightening could end soon and that the inflation target may need reevaluation in a post-crisis environment. JP Morgan says that their presence in China continues to evolve and they continue to invest in China. Goldman president says we're not leaving China. Companies are changing their behavior. Essen urges the World Bank to end support for China. So again, another headline that just doesn't sound like things are moving in the right direction. Fed Moran says anyone concerned about downside risks to the job market should be more concerned now. Scott Bessent says that China, quote, can't be trusted. And here's another headline from the Wall Street Journal today. It says China hopes market pressure will push the U.S. to negotiate. China expects recent trade tensions to hit U.S. markets, hoping losses will prompt President Trump to offer concessions. After pausing mutual tariffs earlier this year, both sides remain cautious amid renewed trade frictions. IMF chief today warns that AI could affect 60% of jobs in advanced economies, 40% in emerging markets, and 26% in low-income countries. She calls it a tsunami for labor markets, but notes AI could boost productivity, though significant work is needed to ensure it benefits society, which I think is probably a fair thing to say. Mexican President Sheinbaum says trade talks with the U.S. are very advanced. Sheinbaum expects more trade advantages for Mexico. Consumer concerns about inflation have fallen to a nearly 3-year low, Morgan Stanley has said. 56% of respondents cited inflation as their top worry, down from 60% in August and 63% a year ago. And searches for, quote, buy Bitcoin have not reached the highs of 2017 and 2021, which were moments that marked major tops. Today, you can see it's at a relatively low level. So that suggests there could be further upside. Treasury Secretary Bessent has said a stock market decline won't deter the U.S. from taking strong action against China, so basically F your portfolio. Senate Republican leader Thune says, I will try to pass a GOP stopgap bill again today, but it doesn't look like the government shutdown is ending anytime soon. Now, today and after hours, you have earnings from United, J.B. Hunt, Pinnacle, and some others. Tomorrow morning, TSMC, BNY, KeyBank, Charles Schwab, M&T Bank, and then in after hours tomorrow, Interactive Brokers, CSX, First National Bank, Bank of Ozark, and then on Friday, Ally, SLB, American Express, Fifth Third Bank, Truist, Huntington, Regions, and Comerica. Okay, so first and foremost, what you really need to know is we don't know anything. This is officially a pissing contest. China thinks that Trump gives a crap about the stock market. I think he does give a crap about the stock market to a certain extent. He doesn't want a bear market. He doesn't want a recession. But I think Trump's ego is bigger than that, okay? If Trump had to choose recession or his pride, his ego, Trump's going to go with his pride and ego, no matter how many people are theoretically hurt in that process, okay? Now, you can make an argument that tariffs are good and we should decouple from China. That's not the argument I'm trying to make, okay? That would be an hour-long separate video. What I'm saying here is we don't know what's going to happen next, but we do know what could happen next, okay? What could happen next is Trump says, hey, Chinese president, we should have a phone call. We should settle this. And they have a phone call and they settle all this, and overnight, problem solved. That could happen. We could have a scenario where there's not much communication. Tariffs go into effect for a little while. It's not really a big deal. They come to an agreement before a crisis happens. Great, that could happen. Well, you could see things get substantially worse. You could see a recession come out of this. That could happen. So how do you invest in a market like this? Well, it's simple. You leg into the stocks that you like on really red days. For an example, I bought more Poet today. Poet stock at about $8 a share. Bought another 500 shares. Set out the alert in the trading community. The stock bounced from $7.92 today to where it currently is right now at $8.48. Is it rocket science? No. Can it be scary when a stock like Poet is down 12% for no reason? It can be. Well, the stock is up 50% from where we bought it today. We made money. Okay? You got to put your emotions aside. Okay? During this kind of volatility, especially when anything can happen, okay? Now, I need all of you guys to really formulate your own backdrop, okay? What I mean, like expectation backdrop, okay? What I mean by this is for 2026, what do you think is going to happen to the economy? What do you think is going to happen to inflation, the consumer, earnings, trade wars, okay? In my view for 2026, I have inflation falling. I have rates coming down. I have AI is alive and well, maybe even starts to look like a bubble towards the end of 2026. Okay, we're not even close to there yet, but we could, start to head down that path. I have real estate starting to move. People taking hundreds of thousands of dollars to their bank accounts as they sell their homes and buy new homes. Very good for the economy, by the way. I have the consumer getting better. Big, beautiful bill. No tax on tips. No tax on overtime. Other tax provisions like being able to write off auto loan interest, okay? There's a ton of tax provisions in the big, beautiful bill that are very stimulative, okay, from a business perspective. So all of that is my core belief, okay? So my core belief would have me taking advantage of the buying opportunities that we get in the stocks that I really like. So what am I doing? On a day where Poet is down 12%, I'm buying that, okay? I'm not going to put all of my money in. I'm going to put a chunk in, okay? 10, 20%, whatever the number is, okay? Well, if we have a green day tomorrow, great. I watch the portfolio go up. Awesome. I'm really not going to invest in the green days. If tomorrow we have another day where Poet's down another 10% or Resolve's down 10%, what am I going to do? I'm going to buy, okay? I'm going to put another 10, 15% in, okay? Great. If the next day later it's green, awesome. I sit on my hands and I don't do any buying unless there's a specific opportunity we come across, which we're coming across them almost daily. So odds are we buy something basically every day, or try to, if we have opportunities, which there's a lot of them in this market. It's kind of hard to keep up with all of them. Great. Next day later, stock's down another 10%. Awesome. Do some buying. Put another 10, 15% in. If markets fall 10 to 20%, that's when we start to execute on margin. That's where we start to use a little bit more leverage, okay? Get a little deeper into the party, okay? That's the game plan. That's how you walk away a winner if this market recovers or crashes, in my opinion, okay? Again, my backdrop is I am very bullish on 2026. Until there is something to prove otherwise, that is my core thesis. So my core thesis would have me buying stocks on weakness. If you're bearish for 2026, you should not be buying this weakness, okay? If you cannot sleep at night, you probably shouldn't be buying this weakness, okay? But I like money. I believe in my, expectations are correct or will be mostly correct. Even if I'm wrong on a couple things, I think the other things are at least going to happen. So yeah, that's how I'm navigating this market, long story short. So, again, let me know what you are doing in your portfolio down below in the comment section. Ladies and gentlemen, that is going to do it. Have a great rest of your day, and I will see you in the next one.